Good evening, everyone. Welcome to our revision classes. And we have a very important paper at our hands. This paper, as you all know, has a 100 marks weightage, which is the paper for your indirect taxes, comprising of the entire GST law and the customs and the FTP provisions. And along with this paper also has relevance because you have one more paper which is dealing with all subjects combined, where you are supposed to handle the real life case studies, which is a multidisciplinary paper. And definitely the topics that you study in direct tax, indirect tax, auditing, law, all these have a combined effect in your multidisciplinary paper. So that shows or that proves the importance of this subject for your overall exam pattern, not only for one paper in particular, but for your entire syllabus. So with this particular point in mind, we should approach our today's revision or all the revision classes that we should be in a position to handle both papers with the help of the knowledge that we gain in this particular subject. Now, the topics that we have to cover today are dealing with the topic of exemption, the time of supply, and the topic of place of supply. I'm sure since this is a revision class, you all would have studied something relating to these topics. And now we have to brush up, summarize, and also in case there are any open-ended points, doubts which you have encountered while studying, that we will be definitely addressing. Also, since it is a revision class, a fast track class, our main thrust would be on understanding the pointers that are there in each of the relevant provisions. And for this, I always suggest students that in our module, we have a very beautiful part called as let us recapitulate. I will urge all the students to kindly refer to that particular part, which according to me is the best material that is available today for a thorough and a pinpointed revision of your topics. So let me start with our today's deliberation. So I welcome all of you all who are present: Atul, Mukesh, Resham, Surekha, Priyanka. So let us all come together for this 6 hours revision class. Before I start, as we are going to start with the exemption topic, I would ask if anybody from you has any particular query or any particular point which you want me to deliberate upon more in this particular topic of exemption, you may please post it in chat. You may even unmute and put your question. Students, anybody having any particular doubt, question? अशोक जी, आई एम ऑडिबल ना? अच्छा, नहीं, थोड़ा मेरे इधर लाइट इश्यू है, तो मैं बोला क्या पता इफ बाय चांस देयर इज सम कनेक्टिविटी इश्यू. ओके, so students, let us start now. Let us understand some more important aspects of this chapter besides the exemption entries. So we all know under GST, broadly, the supplies can be supplies of goods or supplies of services. Even though we say GST is one nation, one tax, but in the entire GST law, you will find provisions which are differently designed for supply of goods, for supply of service. Like the RCM entries are different, the present chapter exemption entries are different. Even in case of time of supply, place of supply, in case of even registration, composition, you will find that there are many places where the law has very elaborately and very specifically carved out different provisions for supplies of goods and different for supplies of services. Now, When we come to the exemption chapter, you have an exemption notification which is for goods also, and you have for service also. In case of goods, it is part of the rate schedule itself, where in the rate schedule, they have put nil rate in front of those entries. This is how the goods become exempt from GST. When it comes to the service exemption, there is a specific notification which lists out all the services that are made exempt from GST. Importantly, in our entire syllabus, we do not, I repeat, we do not have to go into the details of the exemption entries of goods, which are part of the rate schedule itself. So we are not covering that in our syllabus. It is not there in the syllabus, so it won't be even asked in your exams. Though some generic information is given in the module, like they have given you a few example type of things as to what goods are eligible for exemption, but no detailings are given, and that is not part of the syllabus. So first keep this in mind, that whatever we study in this chapter of exemption is limited only to exemption of services. Exemption of, I'll say, supply of services. But before I go to the respective entries, let me start with the first most important part. What is that? See, when you study exemption chapter, what you are actually studying is not any section. You are studying the exemption notification and the entries given in the exemption notification. Now, what is important to note in this is that a notification is a delegated legislation. What is a delegated legislation? See, Constitution of India has empowered the parliament, not even the government, be very clear, has empowered the parliament to pass and implement laws for exercising various powers given to the respective parliaments, whether at center or at the respective states. Now, for the purpose of taxation also, similar powers are given to the parliament. Exercising these powers, parliament passes the law, which we call as the act. However, for the purpose of proper implementation, we require many other things besides what is given in the act or in the sections of the act. These are given by way of either rules, or these are given by way of notifications, or these are given by way of circulars. Different authorities are empowered to bring out different things. Like if I talk particularly about GST, so the GST Act, the CGST Act, respective states, SGST or UTGST Acts, and the IGST Act, for that matter, even the Compensation to States Cess Act. These are the acts which are passed by the parliament, center or respective states. But these are only acts making specific provisions for specific requirements. However, many things which are not there in these provisions, in these sections, they are in the form of rules. So you have another set like the act, which is rules, which is passed or which is given to you by the government. Similarly, you have notification, which is again passed or notified by the government. And then you have these circulars, which are given to you by the board, which is the CBIC board. Now, whatever is done by any authority below the parliament, or I'll say other than the parliament, is what is a delegated legislation. This delegated legislation is, you can say, the subordinate law, subordinate to the main act, which is passed by the parliament. These are subordinate laws in the form of rules, notifications, circulars. Importantly, Constitution gave the power to the parliament to implement different laws, including the taxation laws. Now, if any of these other authorities or bodies like the government or the boards, if they have to bring out something and it also has to take the color of law, they should be first authorized to do that. They should be empowered to do that. That is where you find a section in the entire act which does this. Now, when you go to the Income Tax Act, just to draw a parallel, you find that in the Income Tax Act, exemptions are given in the Act itself in Section 10 of the Income Tax Act. So it is passed by the Parliament itself. They have not thought the need, emergency, or any type of obligation to delegate that power to government. However, in case of an indirect tax law, that need, that urgency, or that pressing requirement is felt, because of which the act in their wisdom thought of delegating it to the government. And how they have delegated, that is by way of section 11 of the CGST or SGST Act or section 6 of the ITST Act. This is what is the first thing that you have to understand. There may be a question where you would be required to answer on the basis of section 11 or section 6. Sorry. Fine. Now, what does section 11 or 6 does? It is delegating the power to the government. How it has delegated the power? It has delegated the power in two capacities. One, it says that for granting some exemptions, you have to pass a notification. And for granting some other notifications, you have to issue a special order. So it has provided two mechanisms to the government to provide you exemption. Now, what is the difference between these two mechanisms? One is by way of notification, one is by way of an order. The difference is that where the exemption is to be granted not to a particular person only, but in general to a particular category of persons, like I will say hospitals, or for that matter trust, or for that matter professionals doing a particular set of activities. It is not given to one particular person. In that case, it is called as a general exemption. Whereas where it has to be given in a particular circumstance for a particular pinpointed case only, then it becomes by way of a special exemption. And that is where the difference is drawn, that when you are giving a general exemption, it will be given by way of issuing a notification. However, when you have to give a specific exemption, that has to be given by way of passing a special order. So I'll just read out this, what it says. So this power says, and it is copy paste both in IGST Act and CGST Act. So we need not study it separately. It is copy paste same. It says that in case where exemption is to be granted, obviously exemption is for what? From the payment of taxes, but under some circumstances of exceptional nature, then such type of exemption, which is a very specific exemption because it is of an exceptional nature, will be granted by way of passing an order. And in that order, you have to mention what is that special circumstance. This is also important. So indirectly in the order, you are giving justification why you felt the need to give this one pinpointed exemption to a particular person only. And most importantly, how is in public interest. It cannot be an interest to one person. So where exemption is given to one particular, I'll say person in an exceptional circumstance nature, you do it by way of passing a special order. This is the power given by the act to the government. Similarly, where general exemptions are to be given. General means anybody can be covered, not only one person. Whoever is fitting in the conditions of the exemption, anybody can be covered. That is called as a general exemption. It has to be given by passing a notification. Now in general exemption, there could be two types. One is an absolute exemption or second is a conditional exemption. What is an absolute exemption? Again, this point is important and of relevance for your exam. So be very clear. Difference between absolute and conditional exemption. Absolute exemption is an exemption which says this is exempt. Conditional exemption is an exemption which says if you do this, then this will be exempt. Now, as you can understand from the difference, the moot point which is relevant for exams would be that whether the assessee, whether the taxpayer has a choice to avail or not to avail the exemption, the answer lies in the difference between the two. Where the law says, law means the notification says this is exempt, which means it is an absolute exemption, it is also compulsory. You don't have a choice to follow or not to follow that exemption. However, where the exemption is conditional, which says if you do this, this, then this will be exempt, which is a conditional exemption. By default, it becomes optional because in case you do not want to avail that exemption, don't satisfy one of the conditions. That's it. So, important question for exam or important pointer in this to be kept in mind in exam is which one is compulsory. Next, one more important point, which I think is not mentioned here, is many times after the issuance of notification or special order, which gives the exemption, there is a need felt to clarify something in that notification or in that order. Now, what happens? Let us say I give exemption saying agriculture is exempt. But tomorrow the question comes, a particular person running a nursery, a plant nursery selling saplings, whether that is agriculture, a particular person growing something on his terrace, which is nowadays a new trend, whether that will be agriculture, because these are something of the new generation. Now, when such queries come, when such issues are raised, then there is a need felt to clarify them. Whatever they want to clarify, they have the power to clarify, saying either yes, it is covered, or saying no, it is not covered. But they do it by way of adding or inserting an explanation. Now, this explanation, which is inserted obviously at a later date. So originally you issued the notification giving the exemption for agriculture. After receiving these queries or doubts, you decided to clarify it by giving an explanation. Obviously, you do it by amending the same notification, adding or inserting that explanation. The question is, again important for exam, whether this explanation, whatever is added, will have effect retrospectively from the date of issuing this notification, or it will have prospective effect, that is the date after this explanation was added. For this, the law which is provided in both these sections 11 and 6 says, if this explanation is added in the notification within 1 year of bringing that notification or bringing that exemption entry, then the explanation, whatever it says, applies retrospectively. However, if this explanation is added in that notification or after that exemption entry was added, after 1 year of that date, then whatever is mentioned in the explanation will apply from date forward. So it will be a prospective amendment. So these are two important pointers with respect to the delegated power to issue notification or special order granting the exemption. Also, one thing very common, I'm sure everybody would be knowing, that whether it is act or whether it is rules or whether it is notification, anything is always by way of firstly recommendation by the council. So whatever amendments you see in the act, which is done by parliament, or in the rules or notifications, which is done by the government, all this is done only on the basis of recommendation by the council. So we have council meetings periodically. In that, on different issues, they deliberate, they take a call, they decide, and whatever is decided is then implemented either by bringing an amendment in the act, if it is part relating to some provision of the act, or in the rules, or by way of bringing a notification or amending the previous notification. I hope the background of entire exemption is clear. And also I'll repeat, we are only going to deal with service exemptions, which is part of our syllabus. Goods exemption is not part of our syllabus. Fine, students? Up till now, anybody has any doubts or questions, please feel free to ask before I proceed. Anybody?
No, sir.
So everything is clear, Priyanka. Excellent. So let us proceed. Let me take you to exemption entries. I may skip few entries in between for the paucity of time, but don't worry, we are covering all the major entries. Now, the first exemption entry, which is important, which is relevant for exams, is exemptions for charitable activities. Now, some important pointers or clarifications to be kept in mind. Two important requirements are there for getting this exemption. One, the entity who is providing these services, and second, the nature of these services which are exempt. So two things have to be satisfied simultaneously to be eligible for this exemption. One, the entity who does this activities, and second, what are those activities. Now here, firstly, the law says that those entities who are registered as a charitable trust, but under which law? As per section 12AA 12AB of the Income Tax Act. And I'm sure you all would have also studied Income Tax Act, and taxation of trust is one of the important chapters of your income tax syllabus also. So you would now be knowing 12AA and 12AB. So one thing they have connected you to the income tax law is regarding which entity is eligible. But having said this, the second important point that you should understand and keep in mind is that in income tax, there is a different definition of what is charitable purpose, which is much, much wider than the concept or the terminology used over here, that is charitable activities. So what is exempt over here and what will be exempt in income tax to the same entity, because the registration is same for both acts. Registration as per 12AA AB of the Income Tax Act. Once you are registered, you qualify even for income tax law and you qualify even for the GST law. But what activities you are engaged in may be different for exemption in Income Tax Act and in the GST Act. Income Tax Act is much wider, so more activities are exempt over there. However, GST law with respect to this is very restricted. Now, what are the activities, services which are covered over here? First is where the service is done by a person who is engaged in doing what? Conducting any religious ceremony. So any type of puja, havan, marriage ceremony, or at the time of birth or death of person, we have different rituals. So the Panditji or the person who is qualified by the respective religious text, whatever religion you are following, every religion has its own specific religious text which prescribes, which authorizes a particular person to perform that puja, like we say Pandit ji or Maulana ji or Father. These people are conducting the religious ceremonies. As I said, death ceremony, birth ceremony, at the time of marriage, you have ceremonies. So these are all religious ceremonies. Again, what is a religious ceremony? It is a ceremony which is again authorized by your respective religious text. So once these ceremonies are conducted, the persons who are conducting them, we pay them some dakshina. We pay them some remuneration. That remuneration is exempt. Here, there is no requirement of that person being a registered entity under 12A, 12AB. That is for the other part. Then we come to the second part, where you are engaged in the service of renting. Renting of what? Renting of the presents. Presents means the whole premises. Belonging to whom? Belonging to a religious place. So, there is a religious place like a mandir, a dargah, a mosque, a church, and many times you'll find that these religious places have some places for stay. I'm sure you all would have seen this whenever you visit different religious holy places. You'll find that there are many dharmashalas. Generally, it is called as dharmashala, which is run by any of these registered trust. So it is presence of a religious place meant for general public, owned, managed by institutions, entities which are under any of these sections of the Income Tax Act. And once this condition is satisfied, then the renting charges which you pay will be exempt up to a certain limit. What is this limit? The limit is it will be exempt if the amount is below 1000. It will be taxable if it is 1000 or more. So up to 999 per day. Now this is for what? This is for renting of rooms. So like the Dharamshala rooms, which where we go and stay overnight when we visit some holy place. Similarly, many times these places have some halls or some open areas where different types of ceremonies like your Janeu ceremony or your marriage ceremonies are performed. So they give even those places, those either enclosed places or the open spaces. So they have used the terminology community halls, Kalyan Mandapam, open area, etc., where the charges per day do not exceed 10,000. So it is up to 9,999. It will be exempt. If it is 10,000 or more, it will be fully taxable. You will not deduct that 9,999. So it is that cutoff. Below that, fully exempt. Above that, fully taxable. Third, if these religious places are also having some commercial places, shops or offices which they are giving on rent, like again you will find outside many temples, the boundaries of temples have shops which generally belong to the temples only. Many times inside the temples also you have shops which the temple has rented out to different persons. So whatever rent the temples, the mosque, the gurudwaras are getting from these shops, that will also be exempt if the per month. Now, here the distinction has to be kept in mind for shops, sorry, for Kalyana Mandapam and for rooms. The limit was per day, correct? As you can see. But when it comes to shop, which is never taken for a day, here the limit is per month. So just shop rent below 10,000 per month, fully exempt. Next, where the committee of KMVN, Kamavan Vikas Mandal, which sends you to this Kailas Mansarovar Yatra or the Hajj committee. So when you want to visit any of these two religious places, you require the entire procedure to be run through these committees because they are the only person authorized by the government to do that. So whatever fees charges you pay to them, that will be exempt. Next, training or coaching provided by, here first case is an individual, in second case again the same condition, charitable activities entities. Now what are the training coaching dealing with? It deals with recreational activities. So it is not coaching classes, it is not any type of academics, it is recreational. So it may be dance form, it may be music, any of these recreational, and condition is it should be relating to art and culture. That is why I said dance, music. So you have these Kathak classes, you have the tabla classes. All these would be exempt if it is provided by an individual or where you have these sports academies. Now, if sports academies are run by individuals or corporates, it is taxable. But where these sports academies are run by charitable entities, many times you will find there are multiple sports academies, whether for cricket coaching, football coaching, basketball, badminton, etc. Some of these are private. They will be fully taxable on whatever coaching fees they are charging. But the one which are run under some trust, again which trust? As per Income Tax Act registered at 12A or AB, their fees would be eligible for the exemption. So this is the first entry. Second entry is relating to agriculture. Now in agriculture, some important aspects have to be kept in mind. What is that important aspect? Firstly, we have to differentiate between agricultural products, that is goods, and agriculture related services. Many times when we talk about agriculture, in front of our eyes, what comes is the gehu, chawal, the vegetables, the fruits, that is the goods. This entry, or rather this entire notification, since it is dealing with only services, as I mentioned at the start, please be clear, they are not talking about exemption to apples or exemption to any type of vegetables or exemption to raw milk. No, they're not talking about that. That is part of the rate schedule of goods. Here we are talking about the services relating to agricultural goods. Please be clear. Obviously, the services are relating to agricultural goods, but here the exemption is not for the goods. That is in the rate notification chapter of goods, which is not part of our syllabus. Here we are talking exclusively about the services which are performed. Now here you have to be specific because somewhere you will find certain things are overlapping. So be very clear and precise because you have many times a practical question which includes multiple activities done by a particular person or taxpayer, out of which few may be exempt. That is where this entry would be of help. So what is the service that you are giving? You are doing loading, unloading, packing, storage, warehousing. Be clear, transportation is not covered here. However, when we go to the transportation entry, you'll find that in transportation also, transportation of agricultural produce is exempt, but that is not covered here. And there is one small distinction. What it is, I will bring to light once we go to that entry. But for the time being, I want you all to make a note of this, that this particular agriculture related service, this entry does not cover transportation. But other than that, like for transportation, you require all these things, loading, unloading, maybe packing. Many times when you are providing end-to-end logistics, you also require warehousing, storage. Those activities are only exempt if they are independent. Transportation is not covered here. Now, for what agricultural item this is exempt? This is exempt only for rice for the time being. We have again the similar point. As I said, it may be, or you will find it overlapping, but there is some difference and I'll bring to light what the difference is. So here they are saying of rice only for the time being. Then you have only warehousing activity, not the others. Why? Because this is for minor agriculture, minor forest produce. Then you have service, again limited only to storage and warehousing. Now they are saying it is applicable to cereals, pulses, fruits, vegetables. Again, something relating to agriculture. And interestingly, you will again find same activities being exempt below. And again, it will be for agriculture. Difference we'll understand. Next, artificial insemination of livestock. So it is the artificial reproduction of livestock, but other than horses. Now there is some special, I'll say soft corner, or maybe not soft corner, a hard corner in the hearts of the legislature, because even in income tax, when you read the exemption entry over there also, over there they have given us different treatment to horses. And everywhere, wherever some benefit is given, it is always other than horses, right? So the same legacy is continued even in the indirect tax laws. Fine. So this entry is done. Next, carrying out any intermediate production process as a job work. Now, what is this? When you're doing agriculture, agriculture requires different stages, different small and big steps. Earlier, traditionally, when things were less mechanized, when the people themselves were doing the farming, everything was done by the same farmer or his or her family. However, as things progress, mechanizations came in, specialization of work came in. Now, many times you'll find that a farmer may be outsourcing some part of his activity, which earlier traditionally he or his forefathers were themselves doing. Now, for better output, now for better quality, he is outsourcing those activities. Those are these intermediate production process as job work, which should be obviously in relation to the cultivation, because we are talking about only agriculture. So no other manufacturing job work is not exempt over here. Now we come to the generic entry, which deals with different services of agriculture which are exempt. So it says services relating to cultivation of plants, rearing of animals except horses for food, fiber, fuel, raw material, etc., etc. If you recall, this is also similar to the definition of agricultural produce under GST. So what is agricultural produce? It is same produce resulting from this. So there are two things which leads to agriculture or agricultural output. One is cultivation of plants. When they say plant, it will include your regular farming of plants, food grains, etc., plus also of forest and trees. So when we say plant, it is not limited only to all those rice fields and these fields. It also covers trees and forest. So cultivation of plants covers that also. And then the second type of agricultural activities, whatever output you get from rearing of animals, like you get eggs, You get milk, you get cow dung, you get cow urine, and even the flesh. All these things which you get from the activity of rearing of animals, these things also become agricultural produce. Again, an interesting analogy. If you compare the agriculture concept of income tax with GST, you'll find a very interesting difference. In the income tax law, in agriculture, because over there also agriculture income is exempt, they cover only incomes arising from farming or cultivation. They do not cover the income arising from rearing of animals. So over there, if you are a person who is running a poultry farm and selling the eggs, or you are running your own cattle and rearing cattle and you are selling the milk of the cattle, the income is not exempt. But the same eggs, the same milk is agricultural produce under GST. So this is an interesting difference which you should keep in mind. Now, relating to this agriculture, what is exempt? First is performing the agricultural operations, which includes everything: cultivation, harvesting, threshing, cutting, etc. Most important, second thing, this will be part of some of your comprehensive question. I am a manpower supply agency. So what is my service or what do I do? My business is to provide human resource to anybody who wants. So people want some employees, unskilled employees for construction site, I send it to them. They want some mining activity, I send it to them. Similarly, if somebody asking me for laborer for working on farm, I even provide that. So when I'm providing labor for working on the farm, that is in the agriculture activity, whatever charges I'm getting for this manpower supply service is exempt. Then comes those processes which are carried out at agriculture farms which do not alter the essential characteristics of agricultural produce but make it primary marketable for primary market. In short, the basic simple activities like in case of food grains, you need to clean it, maybe you need to remove that from inside the peel. So all these basic processes which are done on the agriculture farm itself. Now you may outsource it because I have those specialized machines. I'll bring the machine to your farm and I'll do that cutting, threshing for you. So whatever charges I'm taking will be exempt. Another important point to be noted is where I am giving to you on rent. What I am giving to you on rent, either any agro machinery like tractor or any of the machines required for threshing, cutting, or the farmland itself. So when I am providing any of these things, the charges that I am getting is in the form of lease rent or rent. This is exempt if the lease rent or rent is for providing either agro machinery, which I gave example, or either providing the agricultural unit. Now comes the overlapping point. Loading, unloading, packing, storage, warehousing. This was already covered above. Now they are saying of agricultural produce. What is the difference? When this same entry was covered here for rice, even for cereal storage, etc., was covered. And now you are making a generic entry for agriculture produce. The question was why you require a special entry here and here. This already is covered below. What was the need to have a separate specific entry? The answer is, pay attention. Sorry. The answer is that agricultural produce, the term which is used over here, may not cover rice. Yes, may not cover pulses, which is mentioned here, may not cover each and every fruits and vegetable. Yes, you'll say, sir, how it is possible? Rice is agricultural produce. Cereals, pulses, fruits, vegetables are agricultural produce. No, not necessary. How? I'll tell you. When you read the definition of agricultural produce, the first part of the definition is saying this. What? Agricultural produce means produce resulting from what? Cultivation of plant, etc., etc., for food, fiber, fuel, etc., etc. And then it says on which Only those processes are performed which are performed by the grower and which are necessary to make it ready for the primary market. This is where the catch is. This is where a rice becomes not agricultural produce. Acha, I'm not talking about the rice which you get from the mills after polishing. I'm not talking about those rice. I'm talking about the sada plain rice, unpolished rice. Even that is not an agricultural produce. Even the dal or the chana that you are purchasing raw from a shopkeeper, from some grocery shopkeeper, that is also not an agricultural produce. Why? This is where we need to understand that definition of agricultural produce. The last part of it says, so first part you are satisfying, it is arising out of cultivation of plants, fine. But what is the last part on which either no processing is done or only that much processing is done which is necessary for bringing it to primary market. Now, what is a primary market? Primary market is a market where a farmer sells. Importantly, it is a market where you and me do not go to buy these things. We go to the secondary or the tertiary market. Even if you say wholesale, it is the secondary market. Primary market is something different. Those are the APMCs, Agriculture Marketing Produce Committees, those markets where generally the agents go and buy the entire produce of 3, 4, 10 farmers or the entire village. Importantly, what is reaching there, or I'll change my words, in what state it is reaching there is agricultural produce. In the state in which a farmer sells an item is agricultural produce. Interestingly, farmer does not sells the rice in the form in which we buy it. Even though you may buy an unpolished rice, but when you are buying a rice, you are buying that rice dana, white colored. Whereas a farmer is selling a rice with the husk. He is not even removing the husk. Same thing happen for pulses. When we buy the dal without the husk. You have an option. Sometimes you buy the dal with the husk also, but we majorly buy different types of dal without the husk. No farmer removes the husk. When he or she brings the produce to the market, which is the primary market, it is with husk. Similarly, for many vegetables and majorly for fruits, what we go and buy in the market is firstly not a primary market, and what we buy is already artificially ripened, artificially done some treatment. So either the apple looks more shiny, or it looks more bigger, or it is more juicier, or it is more good colored. All those are artificial processes done before it reaches you. Even though it is in raw form, understand, but students, anything in raw form need not be the agricultural produce as defined in the law. This is where this rice, which is a separate entry over here, is required. Because when they are saying rice here, it means rice in the form how you and me get when we bring it or buy from the market. That rice is not an agricultural produce. So, till the state it is an agricultural produce form, that is with the husk, everything, it will be covered, the transportation, etc. Sorry, where the entry is. Yeah. Till the time it is with husk or everything, it is covered here. The loading, packing, transportation, not transportation, sorry, it is covered in separate entry, but the warehousing, storage, etc. But the moment the husk is removed, it is no more agricultural produce. But after removing husk, also there are many stages. Firstly, when I don't know how many of you have seen that the rice is slightly brownish, it is not white. So we have to do milling to remove that brownish layer. Then it becomes the unpolished rice. Then some rice even go to the mills to get polished. So there are different further processing done, and then the rice is the rice what we get at our home. Till all these stages, it is now no more agricultural produce. Till Because of this separate entry, it is eligible for exemption. What? Loading, packing, storage, etc. Similarly for cereals, pulses, fruits, vegetables, because these may now be treated. They may not be in their original form, how the farmer has sold it. Many agricultural produce like vegetables that we buy from the market, even though they are raw, but whatever form they are already cut, they are nicely washed, they are maybe done some shaping, cleaning. If we see it in the form how the farmers have brought it, we may not even buy or even consume it. So there is some more stages happening in between where it no more remains agricultural produce, but the law wants to give exemption even to their storage. Hence, these are separately introduced. So all fruits, vegetable up to the stage they reach our houses where they are no more agricultural produce, still their warehousing storage will be exempt. But important, their packing would be taxable. Their loading, unloading would be taxable because now they are in such a form after the artificial ripening or the waxing or the artificial making it more bigger. After all these processes, it is no more agricultural produce. So their other activities would now be taxable, but their storage warehousing would still remain exempt. Why, students? I hope you all have got the differentiation and mainly why you have an overlapping entry. Then agriculture extension and the commission which is charged by the APMCs. Commission means the uh, charges what these APMCs, that is the market committee boards charge, that is exempt, plus the agents, the adhatiyas, who are so-called, whatever commission they charge for the purchase sale of the agriculture produce, that is also exempt. Then we come to the third category, which is education, a very important category, but this will have a very specific question that is pertaining to a education institute one. But it can be a part of generic question where you as a transporter are doing transportation for some school or college. You as a caterer are doing catering for school or college. Then this same entry is required in a generic question. What is a generic question? The question is not about a school. The question is about a transporter. But a transporter is doing transportation of all different agricultural items also. He is doing transportation of newspapers also. He is doing transportation of one of these categories also. That is where you need to apply multiple exemption entries at the same time. So here, one, if the example is of school, college, then you require to be specific to this end. But where the example is of some transporter, caterer, some security agency, you have to apply 2, 3 different entries collectively because that taxpayer is providing service to different entities, including a school, maybe including some trust, maybe including some private entity, maybe including government. So there you have to apply multiple entries to find out of all these different services, which of the service of that transporter or of that caterer would be eligible for exemption. That is where multiple of these entries have to be applied one by one. Fine. So starting with the exemption for the education services, there are two parts of exemption. One is exemption for the outward services given by the educational institutions. Second is for the inward services which the school or educational institution is getting. Now, when we come to outward, these are the two entries mainly for the outward exemption. Importantly, what is to be noted and kept in mind is that when they are talking about outward service given by an educational institution, here you will see it simply says services, which means any or all services, which is given by an educational institution, and it has not covered a list what would be covered. So any service given by educational institution either to their students or their faculties, that is teachers, or their other staff. So any service, it may be the education service, it may be the boarding lodging service, it may be the food service, it may be the extracurricular activity service, any service given by a school, college, whoever is covered in education institution, to their students, to their faculties, to their other staff. All service, any service would be exempt. I hope this is clear. Second, now this was added later on because of some dispute, some confusion. That is, many times you'll find that different colleges, especially nowadays, even schools, have some entrance exams before taking up that candidate or before giving the admission to that candidate. Now, in this particular case, these schools, colleges, they charge some fees for that entrance exam. Now, the issue was that when a particular person is approaching my school or college for admission, and I'm still conducting their entrance exam, after which I will decide to give admission or not. So, out of 1 lakh people, I'll be giving admission only to 200 people, let us say, but I have charged this fees to total 1,000 people. So out of 1,000, not lakh, out of 1,000, let us say I'm going to give admission to 200, but I have charged this fees to entire 1,000 probables. They are not yet my students. In such a case, whatever fees I've charged to them, whether it will be taxable or exempt. So in this regard, this particular point was introduced. And it said that now here they are not saying it is to students. It is saying services provided by an education institution. How? By way of conduct of entrance examination against consideration in the form of entrance fees. So wherever any entrance fees is charged, that will be exempt even if you are not yet my student. Correct? Now comes the second part. The second part is the inward service. Now in inward service, we have to be specific as to who is receiving this inward service, one, and what are the inward services which are exempt. When it was outward, it was not important that what services you are giving. So far as you are giving it to your students, faculty, staff, everything was exempt. But when it comes to inward, there is some condition. What is that? Now you will see that. Firstly, let me explain you what will be or who will be covered in educational institution. One, all schools which are from pre-primary up to standard 12. Now, when I'm saying all schools, it means it covers all boards, whether the SSC, CBSC, ICSC boards, and even the foreign boards, that IGSC something, right? The Cambridge board and all those, Oxford board and all those. So all Indian boards and even foreign boards is first category of educational institution, which is up to standard 12, starting from pre-primary. Second category is after standard 12. So let us call them as colleges, providing you some degrees, either graduation, post-graduation, masters, etc. So let us call them as colleges in our language. That is also eligible for exemption because they are also covered in the definition of education institution, but with condition that they should be offering or they should be providing degrees, or their education should lead to a degree, and the degree should be recognized by laws of India. This is where foreign boards will not be covered. And third educational institution category covers all those institutes which provides vocational services and which are approved either by the state or by the centered affiliated bodies. So vocational courses run by those institutes which are having accreditation with or accreditation by the center or the state. Now, when you talk about these three together are called as education institution. Now, when they are receiving inward service, not all services are exempt. What are exempt? First, services of transportation of student, faculty, staff, services of catering including midday meals, and services of security. We all understand this, cleaning, housekeeping. Now, these three services, inward, what these schools, etc. are receiving, is exempt out of these three categories only to the first category, that is for those educational institutions which are engaged from pre-primary up to standard 12. So these three inward services are not exempt for colleges or for those institutes providing vocational training. They are education institutes, but for them, these inward services are not exempt. Then Then comes another inward service, which is supply of online educational journals, periodicals. This exemption is provided only to the second category of education institution, that is those which are providing or running curriculum for obtaining qualification, that is in our language, college. And then the last category of inward service, which is exempt to all three categories. Schools also, colleges also, vocationals also. That is services relating to admission or conduct of exams. So in inward, there are two restrictions. One, what services? Second, who is receiving these services? For outward, no such restriction. All services given, only restriction is it should be given to the student or to the faculty or to the staff. Then there is one more exemption, which is service of affiliation provided by the Central State Education Board or Council. Now, what is this? You'll find that many times there are many schools, colleges which use this affiliated to, and then they write some name that they are affiliated to center or state or some board, etc. Now, for this, they are supposed to pay some affiliation fee. Now, the question was, they are paying affiliation fee to some university or some board with which that school college is affiliated, connected. But that is not a fee which is charged by the school college for to the students. That is also not fitting in the inward supplies that we just studied. So whether it was eligible for exemption, there was a dispute. This dispute has been put to rest by this entry. The entry says services of affiliation provided by center or state boards or councils or other similar body by whatever name called to a school established, owned, controlled by central state government, etc. So in short, the affiliation fees paid by the schools to these boards. Is this fine? I hope you are getting all the exemption entries and the minute pointers which are relevant for exams. Anybody having any doubt? I hope the speed is okay. Yes, students, everything going proper?
Sir, please explain the point 4 and 5 of B again.
Beta, which point 4 and 5?
Services related to admission to or conduct of examination by such institute and supply of the online education journal or periodical.
So what is your query? See, this service is exempt to all three categories of education institutions, schools also, college also, vocational also. So any of these three receiving services relating to admission or conduct of exams, that is exempt. What is your doubt? So see, here there is no qualification as to who should be receiving. So any of
I'm
these
not
three.
able to, I'm clear with the upper three. I'm just confused with the fourth and fifth one.
Achha, so you want to understand what is the nature of service covered here. So I'll tell you, see, nowadays, if you find
Yes.
all these corporate schools or the big schools, they outsource this activity. That is, the schools themselves are not doing this. They, during the admission period, they will outsource this entire process of admission to some outside agency who have good counselors. So they will appoint a team. They will, let us say, they will appoint me. I will bring my entire team of counselors who will sit there, and all the prospective parents who are coming to the school for inquiring about the school, my team will be counseling them and getting the admission done. Similarly, for conduct of exams, we require so many things, like we require setting of paper, we require checking of paper. See, traditionally, all these things were done by the school teachers or college teachers themselves. Now things have changed. Many times, the school college teachers are not involved in doing this, or they are purposefully kept out to avoid any type of bias or influence. So at such times, they again outsource this to outsiders. Some outside experts would be setting the papers, outside different teachers or experts would be checking the paper. That is what is this service. Similarly, nowadays you'll find that many reputed colleges have their online journals, like how you get student journal. Even these all schools, colleges have their online journals. Again, the schools themselves do not prepare the journal, or the college do not prepare the journal. They have outsourced the work again to some group of experts who are given the topics on which they will prepare different articles, different write-ups, and that month's journal would be issued. So schools, colleges are taking these services so that from their end they are showing that okay, every month they are publishing a journal, but they themselves are not involved in making or drafting the entire journal, which is outsourced. That is this fifth service. Is this fine, beta?
Okay, sir. Thank you.
Understood. Great. We'll just take a 5 minutes break. So in this 3 hours, we have total 15 minutes break. I will take this at a gap of some. So since I'm continually speaking for an hour, just a 5 minutes break. We'll resume in 5 minutes. Now we go to the second most important category after education, and this is healthcare. Why I said second, already we have done three, four, but because this has some similarity with healthcare, with their previous service, that is education. In this service, similar to education, first thing what is important is who is giving this service. Now, similar to education, they have marked three persons. Any of them should be giving the service. First is the hospital. Second is the doctor. Or third is the paramedic. So any of these three should be giving the service. Now for hospital, they have used the word clinical establishment, which they have defined to say hospitals, nursing homes, or OPD clinics. All these are covered in clinical establishment. Second, for doctors, they have used the word medical practitioners, means same like how we chartered accountant have to register with our institute so that we get the certificate of practice. Similarly, those who are registered with their respective councils. What do you mean by council? Now we have a separate council for allopathy. We have a separate council for Ayurveda. So they have notified which are the recognized systems of medicine, and you should be a practitioner registered under the council of one of these recognized systems of medicine. Now, what are the recognized systems of medicine? For that, there is a abbreviation called as Ayush, in which N is silent. So it is double AYNUSH, A allopathy, A Ayurveda, Y is Unani, Y is yoga, U is Unani, S is Siddha, H is homeopathy, and N is naturopathy. So these are the recognized systems of medicine. Third person who should be doing this service is what they have termed as paramedics. Now, who are paramedics? There is a difference between a doctor and a paramedic. A doctor is a one who, like you and me, qualifies an exam and is registered with the respective council to be termed as a medical practitioner. Paramedics are not like that. Paramedics are those people who have done some certificate course or done some training by which they are, I will use the word trained to perform some procedures like all these nursing staff. They are not doctors. The nursing staffs are paramedics. Second, you go to a physiotherapist, you go to a nutritionist. All these peoples, none of them are doctors. Okay, it may happen in one or two cases that some doctor also ventures out to become a physiotherapist. That is a different thing. But generally, these physiotherapists, if you see their qualifications, etc., you'll find a certification where it says that they are trained to do that physiotherapy or that particular activity or procedure. So they are called as paramedics. Now, what is important is any of these three people who is performing the healthcare service. Now, here, what is different from the education entries? In education entry, there was no definition for education service. So it was any service provided by those three educational institutions. However, here, in case of healthcare, we have a specific requirement about the healthcare service also, where I want you all to be more attentive, which is very relevant and important for exams. So firstly, the service should be done by one of these three peoples: clinical establishment, which means hospital, clinics, etc., the doctors or the paramedics. Now, what they should do, they should do healthcare service. And what is healthcare service? The definition says healthcare service means one of the three things. Again, that is also three. One is diagnosis or treatment or care. Be very clear, students, because these are the minute points which are required to be checked out in the exam questions. So are they performing diagnosis? So all your diagnostic centers, all these centers where you give blood samples to get different types of reports, they become eligible for exemption because what they are doing falls in healthcare service. Second is treatment. So where you go to a hospital or a doctor and they do some type of procedure, surgery on you, that is a treatment. Or third care. What is care? Post-treatment. You require some recovery care where you are hospitalized, you are only taken care of, different machines are put to monitor different levels. That is what is care, where actually no procedure is being performed. Only proper care is taken, timely medicines are given, timely injections or salines are injected. That's it. That is what is care. So any of these three things, and then they have also included pregnancy. So any of these four things, if done by any of these three people, would be covered or would be eligible for exemption. Now comes the most crucial part, which is very relevant for exams. That is, when I am saying treatment, so let us say somebody gets admitted to my hospital for undergoing some type of treatment, some type of surgery. In that particular case, when the person is admitted for surgery, I am also providing a room for which I am charging a special charge, room charges or bed charges, whatever you can call it. Further, I am also providing food, I am providing some clothing, and I am charging for all these things separately. So when you see a hospital bill, it covers different line items. Some of those line items are directly healthcare services, but these remaining, like the room charges, then your clothing charges, or even the food that they provide, all these are not directly healthcare. Now the question is whether it would also enjoy exemption. The answer is yes. Why? Because we have a concept in GST, a very unique concept called as composite supply or mixed supply. Here, when a hospital is providing different services which are not directly healthcare, but it is provided along with the main healthcare. So you are admitted for some operation, for some surgery, but in order that that operation surgery is successful, you need to be admitted, remain admitted maybe 1 or 2 days prior, and then maybe 4 or 5 days after that. And during that admitted period, I need to provide you a room. I need to provide you proper take care where food is involved. Even I have to give medicine. See, giving medicines is supply of food. Supply of goods. However, in this composite supply, all these things becomes the secondary items, and the principal supply is the main healthcare component, which is the surgery, which is the operation. Hence, all these becomes part of the main composite supplies, principal supply, which is healthcare, which is exempt. So all these also become exempt. Now in this, few things that have to be kept in mind are: point number one, only those services, all of these, which are provided to inpatients. Inpatients means admitted patients will only be eligible. If somebody is only coming for some testing or checking, which we call as OPD, outpatient department. So they are not admitted to my hospital. They are just coming for some regular follow-up checkup, etc. And at that time, they are consuming some food, they are buying some medicines. The same thing would be taxable, because then these do not form part of composite supply. They all remain independent. So only your follow-up charges would be exempt, because that would be the medical or the hospital or the healthcare service part. Remaining all the services, the same services which you had taken at the time of being inpatient was exempt. At the time of outpatient, they would be taxed. Point number one to be kept in mind. So that you have to read very minutely in the question whether those services are given to inpatient or outpatient. Second, within the inpatient, where I said all these services given to inpatients, even the supply of medicines, which is goods, is also exempt. In that, now they have carved out an exception whereby one service given even to inpatients would now be taxable. What is that service? Firstly, let us understand the logic behind this. So the logic behind this is, now you will find that all the big hospitals have some very super deluxe category rooms, even suite rooms, where all these celebrities or politicians or some big shot businessmen, they all, whenever they or their family members require some treatment, they prefer that room where the costing is very high. Now, the legislature felt that even though it is part of composite supply. But when a person is ready to hire a room which is very costly just for the purpose of extra comfort or for the feel good factor, why should we give them exemption? Keeping that in mind, they brought out this criteria that where your room charges per day are exceeding 5,000, then out of total healthcare, which is a composite supply in which room charges were also included, but if the room charges are exceeding 5,000 per day, we will remove that room charges from your total composite supply, and that room charges would be taxed independently, even though part of composite supply. When the room charges given in the question are exceeding 5,000 per day. However, having given this exception, or I'll say the taxable part, they have made an exception to this exception. It means in one case, this room charge, which is exceeding 5,000, will not be taxable and will again become exempt when this room charge is for what type of room? For an ICU room, for a CCU room, for an ICC room, or for an NICU room. So this is where you have to very minutely read the question. So first check whether it is for inpatient, outpatient. If different facilities or different activities are done for outpatient, only the healthcare, the main healthcare would be exempt. All other food, etc., would be taxable. If it is for inpatient, in general, everything should be exempt. But in that, check what is the room charges. If it is exceeding 5,000, it will be taxable, only the room charges. However, even if it is exceeding 5,000, but if it is for one of these type of rooms, that will again become exempt. Perfect. Now, coming to an interesting exception to the entire healthcare services, where entire healthcare becomes taxable. That is where you have gone for some hair transplant, or for some plastic surgery, or for some cosmetic surgery. Now, this is also some type of procedure or treatment or even a surgery for which you get admitted to the hospital. But if you are admitted to the hospital for one of these three activities, hair transplant, plastic surgery, cosmetic surgery, in that particular case, even though it is healthcare, it will become taxable. But again, an exception. So this is where this entire entry I find very interesting. What is this exception again? That is where you are given this type of treatment, which is of hair transplant or plastic or cosmetic surgery. Why? Not for beautification, but because there was some accident or there was some type of defect at the time of birth, etc. There was some abnormality to make correct that particular defect or abnormality, or because of some accident there was any such type of damage to your hair or your skin, because of which any plastic surgery, hair transplant is required, it will remain exempt. But where it is only for beautification, it will become taxable. So these are some important aspects of this. Then comes the transportation of patient in ambulance. So where a patient is transported by ambulance, it would be exempt. Second, within healthcare, all services given by veterinary clinics, that is for the animals and birds, that will also be exempt. Yes, right, Jyoti. Next, services given by government. Now, for services given by government, there are two parts: outward service, inward service. First, we are talking about services given by government. So we are talking about the outward services. In outward services, what it is saying, service by a government authority by way of activity in relation to functions which are entrusted to a municipality, panchayat under these articles of constitution would be exempt. So what is important here? The services are not done by government. They are done by some governmental authority. Now, see, there is a difference between government and government authority. So when we say it is some PWD, Public Welfare Department, it is not government. It is a government body or government authority. So you have many such departments. We call them as department generally. Like let us say police. Police is not a government. It is one of the departments set up by government for maintaining law and order. So you have so many different departments. They are called as government entities or government authorities. Now, when any government authority is performing any service, and what is the service? Service is in relation to those functions which are entrusted to municipality or a panchayat. Now, somebody will ask me, sir, what are these functions? We haven't read this article 243 WG. How we will know? Simple. You all are living in cities where you have a municipality who every year charges you something called as property tax. In many places, it is called as Gharpatti. See the list. What they do, they charge you for daily cleaning of the roads. They charge you for supplying water. They charge you for the cleaning of all the kachra from your house. All this is the services of municipality as per 243W, 243G. Fine, students. Next, now comes the services which are performed by the government itself. It may be center, state, or even the local authorities. Local authorities are like this, gram panchayats, municipalities, these are local authorities. Now, whatever services they are doing, the entry is designed negatively. So it says all services except the following. So now what list we are going to read is the list for taxable services. So the services which we are going to read now are all taxable services. First, services by Post Department, services by Ministry of Railways, services in relation to aircraft vessels, and services of transport of goods or passengers. Now, even though they have mentioned here transport of goods and passengers in taxable, why? Because we have a separate entry for goods transport and passenger transport. Over there, we may go and find that the same service has become exempt, but in the government entry, they have made it taxable. But all these three are not important because they are very specific. What is very important to us is this generic entry. It says what is taxable? Any service other than the above. Why above? Because above are separately taxable. Now, other than above, all services which are provided to a government, sorry, provided by the government to business entities. Now, here, when they are saying business entities, you have to also remember that these business entities should be large business entities and not small business entities. Who are large business entities? In simple words, those business entities whose turnover has exceeded the registration limit. Keep this in mind. So when they are saying provided to business entities, they are indirectly saying provided to large business entities. So keep that in mind. If government is providing service to small business entities, it still remains exempt. Then what is exempt is, we have read that Department of Post services are taxable, but out of that, few are exempt. The postcard services, the inland letter services, or the ordinary, when you are sending something by post and the envelope weight is less than 10 grams. So all this is exempt. What is taxable is speed post, or where your envelope weight is more than 10 grams, then whatever is the postage charges, that is what is taxable. Then what is important is services provided by central government to business entities. This is what I was mentioning. So when they are providing services to small business entities, who are small business entities? Who are not liable for registration. That is, their turnover limit falls below the registration limit. They are the small business entities. So whatever services are provided to such small business entities, they are always exempt. However, there is an exception. What is the exception? First, all the first three specified services, if they are provided to small business entity, that would be taxable. Or where renting of immovable property services provided, even if it is provided to small business entity, that would be taxable. Next, when government is providing service to one another, that will also be exempt. However, if government is providing one of those specified service, 1, 2, 3 that we studied above, even they are providing to one another, what? The specified services, that will remain taxable. Other than specified, all other services between government to government will be exempt. This is now very important. Now, what we studied in the first 2 points, first was that government providing service to business entities is taxable, and if it is a small business entity, it will be exempt. So only large business entities, it is taxable. Now add one more point to it. So government providing services to large business entity, this is taxable, but one more point, that the value of the service should exceed 5,000. So the final answer is, what is taxable from all this discussion is, if I have to give you one line answer, government providing service to large business entities of value exceeding 5,000 is what is taxable. So you can write this one liner covering these 3-4 points in one point. Fine. I'm skipping the not so important ones. So you can just read it for your own understanding. Now, again, an important category. Service of transportation of passengers. We will have for transport of goods also. Here we are of passengers. I'll give you a very simple logic here, students. What is exempt is transportation service of passengers where you are providing the service to a common man. So services provided of transportation to common man is exempt. What is taxable is services that you are providing specially for transportation. Now I'll explain. Now when I say common man, simple question is whether air travel is done by common man. Answer is no. So air travel has to be exempt or taxable. It has to be taxable because it is not done by common man. What is our logic for this entire category? Transport service for common man is exempt. So air travel should be taxable. However, since government wants to promote some backward areas, so only air travel, that also by economy class, and where either your flight is starting or terminating in one of these places, airports, which are all backward areas, as you can see the names, that is what will be exempt. So air travel only to these backward places would be exempt. Now, besides this, all other points, you will feel that point which I mentioned, transport for common man. How? So they are saying it should be non-AC contract carriage. Again, they are saying it should be non-AC stage carriage. So wherever you are doing transportation, and that transportation is by AC bus, AC train, AC cab, it will be taxable. Where it will be by non-AC, it will be exempt. Secondly, they are saying other than radio taxi. So where you are booking anything using some app, that is what is we call as radio taxi, that will also be taxable. However, I personally feel it should now be covered in common man and it should be exempt. But for the time being, they are not considering it as common man. Yes, right, but it is ECO. So through ECO, what you are doing is taxable. Other than that, it will be exempt. Fine. Then comes goods transportation. That is where through trucks or through all these different transport vehicles, you are transporting goods. Now here the condition is goods transport is taxable if the transportation is done by GTA. It means it is exempt where it is done by person other than GTA. So the exemption entry reads exemption of transportation of goods by road except by GTA. It means if it is by GTA, it will be taxable. Second, even if it is by GTA, which we saw is taxable, but if the GTA is doing transportation of one of these items, it will again be exempt. And again, you will see the same point what we saw in agriculture entry. First, they have said transportation of agriculture produce, and then they have separately said flour, pulses, rice, because these may not be agricultural produce. I explain you the difference. So if you are doing transportation of pulses and rice, which is no more agricultural produce, still that transport is exempt. Similarly, milk, salt. Again, milk. See, milk, when you are getting directly from the cattle owner, that is what is agricultural produce. But nowadays, the milk that is coming to your house, which is pasteurized, which has gone through some processes of skimming, toning, etc., that milk is fully manufactured. So that is no more agricultural produce, but again, a specific entry is given to exempt the transportation of that milk also. Then organic manure, newspaper, magazines, defense items, etc. Similarly, what else is exempt? Where GTA is providing services to unregistered persons, except these. So these are, you can say, for the purpose of GTA, treated as registered not under the GST law, registered under any of these specific acts. So they would be all taxable. Importantly, where the GTA is doing service for some government or government department, that would be exempt. So these are some important points which you have to keep in mind relating to GTA. Then comes banking, very important. What is exempt is interest or discount. Now, interest or discount on what? On any type of deposit. So all types of interest that you get on your saving bank, on your FD, recurring deposit, that is exempt, or all types of loans. What is very important to be noted here is the loans or advance need not only be given by banks. Even if privately I have to give somebody a loan or advance, whatever interest I am getting will be exempt. Similarly, conversion of foreign currency. Now, here what is important is when I am getting my foreign currency converted from a bank or from a money changer, it is taxable. But when a bank is getting their foreign currency change with another bank or with another authorized dealer or money changer, that is exempt. So between banks, when they do currency exchange, that is exempt. But when it is between bank and the customer or the money changer and the customer, it is taxable. Then certain life insurance policies premium is exempt, certain general insurance policy premium is exempt. Okay, now these are some inward services of government which are exempt. I'm not getting into the details, not so important. Again, very important entry, lawyer service or legal service. Now, when you talk about lawyer service or legal service, what is important to be noted is that where the lawyer is giving service to a person, not a business entity, to a person, it is exempt. So lawyer giving services to individuals, HUFs who are not business entities, it is exempt. Second, lawyer giving services to business entities, which are small business entities, again exempt. In simple words, lawyers giving services to large business entities. Again, who is large? Who are liable for registration. Only those lawyer services or those legal services are taxable. And yes, rightly mentioned by Jyoti, they would be taxed under RCM. But Jyoti, let me just point out one important point. In one case, only in one case, lawyer service is taxed under forward charge. Otherwise, you're right. Either lawyer service is exempt or it is taxed under reverse charge. So what is tax lawyer service? Lawyer giving service to a large business entity is taxed and it is taxed under reverse charge. You're right. But there is one service, Jyoti, where the lawyer service is taxed and it is taxed under forward charge. Can you point out, or anybody can point out? What is that one service? Excellent, Siddharth. Very good. So I'll just put down what Siddharth has put down because I think y'all cannot view everybody's message, but I can message to everyone. 1 second. So I'm just copy pasting what Siddharth had put up. Sorry, I think I cannot copy and paste. Okay, I'll read out what Siddharth is saying. So Siddharth has pointed out correctly that where a senior advocate is providing services to firm of advocates. So senior advocate giving services to advocates. So on both sides, there are advocates now. Now here, this service is taxable service and it is taxed under forward charge. So the senior advocate will be liable to pay the GST. Fine. Then if an artist is performing in some classical art form, whether it pertains to music, dance, theater, it would be exempt if their charges for that performance is not exceeding 150. And most important, where they are not acting as brand ambassador. So, common example, Hema Malini ji is invited in a program to perform a Kathak piece where she charges 1,40,000, it will be exempt. If she charges 1,60,000, it will be fully taxable. However, where Hema Malini ji is charging only 1,40,000, but over there, she's performing that Kathak piece in an event, a business event, and she's representing some brand, let us say Patanjali or something of which she is a brand ambassador, then even if she is charging below 150, that would be taxed. Yes, this one again you should remember, where I am selling off my business as a going concern. So I'm selling off my entire business, which is in running condition. Going concern means today, till today evening, I am the owner. Let us say I'm having a hotel. I am the owner of the hotel. Today night, I sign a deal with Ajit Ji and I sell off my entire running hotel to Ajit Ji, rupees 2 crores. So if I sell off my entire running hotel to Ajit Ji for 200 crores, so from tomorrow, Ajit Ji will become the owner of the hotel. So this amount which I'm charging to Ajit Ji of 200 crores is for transferring my entire business as a going concern. Firstly, transfer of a business as a whole is treated as supply of service. Keep this in mind, even though it may comprise of all the business assets like land, building, machinery, furniture, etc. But transferring the whole business will be considered as uh, supply of service, and it will be exempt if it is transferred as a going concern. Also important is it may be transferred whole, that is I can transfer my entire business, or I may have some sections in my business like a manufacturing section is separate, the trading section is separate. I am transferring one of the sections, which is what they have called as independent part. That will also be exempt. ठीक है. So I think we have covered majorly all the important exemption entries. So let me take you to the next topic, which is value of supply. Again, we go through this chapter, all the key pointers relevant for your exams, and in case there are any doubts. Jyoti is asking, sir, if she gets in cash below 150 and some remaining in non-cash. Okay, Jyoti, so your question becomes a starting point, in fact, of the valuation chapter. So Jyoti is connecting the point or asking the question relating to that uh, brand ambassador point of Hema Malini ji's example, that where she comes to an event for performing a Kathak piece, where she's charging, let us say, 1,20,000, which is paid to her in monetary amount, plus she's also given some golden ring, which is valuing rupees 50,000. Now Jyoti wants to know, how do we find out the value? The answer comes in the valuation chapter, but firstly answering Jyoti directly, the law says section 15, which is the valuation section, says value may be in monetary form or non-monetary form. If it is in non-monetary form, then you find out the equivalent value of that non-monetary form, and that is added to make up your total value. So in our example, if let us say monetarily she is paid 120 by check, that is 1,20,000, she is given check, and she is given some gold ring, the value of which is 50,000. So for the purpose of our calculations and valuation, the value will be 120 plus 50, that is 1,70,000. And since it exceeds 150, she will not be eligible for exemption. Fine. Now, going to the valuation chapter, what does the valuation chapter says? Section 15 deals with valuation. Now, firstly, before you go to valuation, you have to first check, or you have to first understand there are three types of values which are mentioned in the valuation chapter. First, section 15.1 read with 15.2 and 15.3. All these three sections combined deals with transaction value. Second, 15.4, it deals with the value which will be derived from valuation rules. And then you have 15.5, it deals with notified value. That is where the government, through some notification, will notify what should be the value. Now, how you should proceed with valuation? First, you have to check that is there any value which is notified by the government under section 15.5. So there are some specific cases for which government has notified a value. In those cases, if your case is falling in those cases, you will take the notified value only. You don't have to check 15.1, 2, 3, 4. But if there is no notified value for your case, then you come to 15.1, which says that the value will be transaction value. But whether to take transaction value or not will be decided by the conditions given in 15, and there are three implied conditions in section 15.1. If all the three conditions are satisfied, then only you will take the transaction value and you will check 15.2, 15.3, that is additions, deletions. But if you do not satisfy any one condition of 15.1, then your value cannot be transaction value. Now, what are those three conditions? First condition is that there should be a value. It means if the transaction is a free supply, then by default 15.1 does not apply. You'll have to go to 15.4. So as I said, there are three sections for value: 15.1 transaction value, read with 15.2, 15.3. But if the condition of 15.1 is not satisfied, so transaction value is rejected, you'll have to go to the valuation rules, which is 15.4. The third one was notified value. We firstly checked and we got out of 15.5 because no value is notified for my transaction. Then the two values that are left for me is transaction value, provided I satisfy all the three conditions. If any one condition not satisfied, I go to the valuation. Now, what are the three conditions? First, it should not be a free supply. It means there should be a value. Because until unless there is a value, you cannot determine the value under 15.1. You have to go to valuation. So it should not be a free supply, first condition. Second, the supply should be made to unrelated persons. And third, the price which we are quoting is the full and final price. That is, the price is the sole consideration. I am not getting something separately, privately. If all these three conditions are satisfied, the value will be the transaction value, and 15.2 and 3 has to be applied. Now, if any one of these conditions are not satisfied, what is this? Either you are making supply to a related person, or the supply is such that there is some extra consideration not mentioned, that is something beyond the price which is mentioned, or if the supply is a free supply. In all these cases, you will forget about the transaction value, even if it is there, and you will go to the valuation rules to determine the value. Now, we come to the valuation rules separately. Firstly, what if you satisfy all the three conditions, which happens in 75% of the transactions, I should say, or more than 75% of the transactions, the value is transaction. Now, the question is, what is transaction value? The answer is transaction value is the price that you and me have agreed for this transaction of supply. Most important. Now, these are the pointers which may be required in some tricky questions of exam. Let us say, what is my transaction with you? I am providing this online coaching. For example, this crash batch, I am pricing at rupees 10,000. All of you are unrelated, so nobody is related to. When Jyoti comes, I say price is 10,000. However, when Mukesh comes, due to some negotiation, I charge, or I am ready to charge 9,000 for the same class. When Surekha comes, due to some other negotiation, I am ready to charge 7,500. When Ajit ji calls me for some student, I am ready to charge 6,000. Now, in this case, for the same transaction to four different people, I have charged four different prices. On what value I have to pay tax? Please understand, students, go step by step. Check 15.5. Is there a notified value? No. Second, have I satisfied all the conditions of 15.1? Is there a value? Yes, there is a value, which is not constant, but there is a value. Second, am I related with any of you? Answer is no. Am I taking something separately besides the price which I'm quoting? No. Means my price is the sole consideration. Though somebody I'm charging 10, somebody I'm charging 8, somebody I'm charging 7.5, and somebody I'm charging 6. But all these are my sole considerations. I'm not getting anything else. Then what is the meaning of transaction value? I'm trying to explain from this example. For each of your transaction, whatever we have agreed, where I have agreed 10,000, 10,000 is the value. I pay tax on 10,000. Where I have agreed 7,500, 7,500 is the value. Where I have agreed 6,000, 6,000 is the value. So this is the meaning of transaction value. That is the value at which this transaction has been agreed between you and me. That is transaction value. Fine with all? Understood? Now, when this transaction value is accepted because all the three conditions are satisfied, 15(2) deals with certain things that have to be included. Included means you have to ensure that these are part of the price. Now, mainly in practical question, the question is included means whether we have to add it. Answer is you don't have to add it always. It has to be included means if these amounts are already added or part of your transaction value, you don't have to add it again. You'll keep it as it is. But if these are not already part of the price, these are separately charged, then as per 15(2), they have to be added. Now, what has to be added as per 15(2)? Taxes other than GST. So let us say our transaction is liable for some local tax or some separate tax which is different from GST. So many times there is some market cess, some market fee. In case of imports, there is basic custom duty. These are different from GST. So those taxes which are different from GST has to be included in the value. Then if I am recovering from you some additional cost, I means the supplier, I am recovering from you some additional cost. What for this cost is? This cost is for anything which I have done for you. Now, what could be this anything which I have done for you? I have done special packing. I am doing transportation. I am doing loading, unloading for you. I am providing you some extra facility in the form of storage, safekeeping, whatever. I can do anything in a supply transaction. So if I have done anything additional for you, so let us say you have contracted with me to supply 10,000 pieces of water bottles, but you also want me to do some special packing. You want me to do the transportation. So all this becomes the additional activities which I am doing for you and for which I am charging separately. Now, whatever I am doing for you and charging separately, if it is a composite supply, all values have to be added to make the total transaction value. This is what this third pointer says. So what has to be included in the transaction value besides the value of goods or service? All additional charges which the supplier is charging to you relating to the same supply. Then what does point 2 says? Point 2 says that where the recipient, that is you, have paid something on my behalf directly. So I was supposed to pay some cost, but for some reason, I was unable to do that. So you went and on my behalf, you paid the cost. I had to pay to my creditor. You on my behalf paid to my creditor. So this is also indirectly a benefit that I am getting from you. And if it is pertaining to this particular supply, that will also be included. So what is given? Third party payments made by you. So you are making payment to some third party on my behalf. So those were my expenses. I was supposed to pay them, meet those expenses. I could not, and on my behalf, you have paid that. That will also be included. Most important is this, which will be very important when you are dealing with exam questions, that is subsidies. Subsidy has also to be included in price. Now, included again, I am repeating, does not always means to add. You have to check in the question whether it is already inculcated, embedded in the value given. If yes, don't do anything because it has to be included and it is already embedded. But if it is not already embedded, it is given separately and not part of the price, then you have to add all these items. Now, for subsidy, there are 2 points that have to be kept in mind. First, the subsidy should be a price-linked subsidy. See, there are 2 types of subsidies broadly. One is price-linked, one is non-price. Now, somebody will say, sir, what is the difference? I'll give you an example. When we get LPG gas, let us say the LPG gas price is 1200, but government says there is 300 subsidy on this price, so you get for 900. This is a price linked subsidy where the subsidy has a direct bearing with the price and it will be adjusted in the price. Second is non-price linked subsidy. What is that? If you go and set up your unit in backward area, or if you do a particular type of business, or if you are doing this for a particular type of person, the government will reimburse some of your cost. Like I will reimburse 50% of your plant and machinery cost, or I will reimburse all your registration cost, or I will reimburse all your costs incurred in the land and building. That can be anything. So where Subsidies are given to meet your expenses. That is not a price linked subsidy. That will not be included. So what type of subsidies have to be added? There are two conditions. First condition, it should be a price linked subsidy. Second condition, this subsidy is given by anyone except government. So it should be given by person other than government. Important, government here means center and state. So even if a local authority is giving you subsidy, you have to include. But if center government, state government is giving, you will not include. Fifth important point that has to be included in our transaction value is interest, late fees or penalty. Now this is what type of interest, late fees, penalty. I had contracted with you that I am supplying you the goods today and you have to make payment to me within 1 month. So 1 month was the credit period given by me to you. You made payment after 3 months. So you are late by 2 months. Now my contract with you had already provided that I am giving you 1 month credit. But if you make late payment, I will charge you extra amount either in the form of interest, which will be per month some percentage, or maybe a fixed amount like 5,000, 10,000, which is in the form of late fee or penalty. Whatever it is, where this is for delay in the payment of the price, then it has to be added to the value of the original supply. So even though interest appears to be an independent supply, a separate item, which is also we just read as exempt, but you have to remember one thing, interest which is for late payment of consideration, firstly, it is not exempt even in the exemption entry. Second, it is taxed, but not as interest. I repeat, it is taxed not as interest, it is taxed as original goods or original service. So let us say I supplied to you some textile article on which the rate of GST is 12% for 1 month credit. You paid after 3 months. So there is 2 months delay. I am asking you to pay me interest of 2 months. This 2 months interest will be taxed at 12%, which is the rate for the original supply. It will be treated as supply of original goods. So this interest amount will not be taxed separately as interest. It will be taxed as original supply of goods or service, whatever it is. However, what has to be excluded is discount. Now, discount can be of two types. One, discount which is given in the invoice itself. So like when you go to a mall, when they provide any offer, how does the offer looks? They say that the price of this is 1,000. However, because of some special offer, monsoon offer, stock clearance, whatever they may say, they are reducing 40%. So they say 40% discount. So net is 600, you pay 600. This is the first type of discount, which is the discount given at the time of supply itself and which is recorded on the face of the invoice itself. This is always to be reduced. It means you have to pay tax on the net 600, not on the 1,000, which is the original price. Second, which is slightly tricky, which has certain issues, is the post-sale discount. Now, what is this post-sale discount? Today, the sale has happened. I have given you 3 months credit. You come to me after 1 month itself. Yes, sir, I am ready to make payment now. I am more than happy because what I was supposed to get after 3 months, you are ready to give me after 1 month. But then you are smart. You say, sir, since I am making you payment early, give me some concession. I said, okay, fine. But then this concession is in the form of discount. We normally call it as cash discount. What is this cash discount? This cash discount is where you make early payment. You make payment before the due date. And that is why, to pass on the benefit so that you make payment early, I am giving you a discount, which is cash discount. Now, when I'm giving you a cash discount, this discount is given in a later date. So today's supply has happened. Today's date is, let us say, 19th of May. You are coming and making payment on 18th of June in the next month. Whereas you are supposed to make payment in August, but you are making payment in June. I am giving you discount because I'm getting my money early. But here, the point is, this discount will be reduced subject to some conditions. First, most important, there was an agreement between you and me that there will be such type of a discount if you make payment early. First condition. Second condition, that this discount is passed on by me to you and you should have reversed your input tax credit. Since I am giving you discount, I am reducing my sales. So I am getting that much tax back from the government. So at your end, when I gave you original supply, you took the full credit. You also reduce your ITC proportionately. And third is this should be recorded by way of a credit note. And the credit note has to be issued as per section 34, satisfying all the criteria, especially the timing. If all these conditions are satisfied, then only this post supply discount is valid and can be given. Sorry. Now we come to the valuation rules. Once you cross 15.1 and you find that you have not satisfied one of the conditions of 15.1, either there is no value, or we are related, or price is not the sole consideration, then you have to leave 15.123 and you have to come to 15.4. 15.4 says go to valuation rules. Now, what are these valuation rules? These are very pinpointed, specific valuation rules given for each specific scenario. So you have to select one of the rules which is applicable to your scenario only. What are these rules? First is rule 27, which was your case, Jyoti, that where either there is no consideration or the consideration is not in money form. Now, if there is no consideration, then what does the rule says? The rule says value shall be one of the following, and this has to be followed in the order. First is open market value. Now, many times students misinterpret this as fair market value. Sorry, this is not fair market value. Fair market value is this third point. Many times students read this because this is open market. Student replace the word open with fair. Sorry, that is not correct. Fair market value is the third point. So it comes third in the sequence. What is the first in the sequence? It is open market value, which means, pay attention, open market value means I am supplying the same thing to others in the open market. My price with you has some challenge. Why? Because it is not fulfilling 15.1. Why? Either I'm not charging you a price, or two, because you are my related person, or three, because price is not the sole consideration. Any of these reasons, 15.1 cannot be followed. Hence, we are coming to 15.4 and following one of these rules. But my transaction with others is following 15.1. So there is a transaction value with them which is accepted. That is what is open market value. So it simply means my price charged to others. It is not fair market value. Fair market value means what others in the market are charging for same supply of goods or service. That is fair market value. This is not that. This is my own price charged to others where my price or my transaction value is accepted. Second, which was your case, where some amount is given in money and for some amount something non-monetary is given. So as I mentioned at that time itself, answering your question, Jyoti, money plus you will find the value of whatever is given in non-monetary form. So I gave example that check of 1,20,000 is given plus some gold ring is given. So you find the value of gold ring, the money value of gold ring, that will be added. Third, fair market value, that is similar goods or service supplied by others in the market. That is fair market value. Then third is consideration in money plus money value of non-monetary consideration. Fine, that is what we already discussed here. Value computed as per rule 30 or 31 in that order. Now what is 30 saying? 30 says that where you cannot find value by any of the above methods, do costing. So you have a separate subject. You would have studied in detail how to do costing of different things. So find out the cost, and in that cost add 10% as your profit margin. In short, take 110% of the cost. That will become the value. This is what rule 30 says. And rule 31 is a best judgment method. No specific method is provided, but it says you follow whatever you have studied in section 15 and you have studied in the other rules. Try to do some khichdi, make some good pulao, and find out a method which suits your case. So there is no specific method prescribed here. Practically, this method is not followed because whoever will follow this, the department will challenge saying that you have not correctly found out the method. So, but at least academically, they have given you this method called as the residual method, which says make a khichdi of all the provisions that you have studied in 15 and in the rules and try to find out a midway to find the value. This is what is rule 31. Fine. Then second specific scenario is where the supply is made to your distinct person or to related persons, but not agents, because for agent we have rule 29. Again, everything is same. First is your price charged to others. Second is fair market value. And third is 30 or 31, where 30 is costing plus 10%, 31 is passenger. Now, what is different in case of related person supply is the other 2 points, very important. What it says, you can either follow one of these rules or you are given a choice to simply take 90%. 90% of what price? Of the price which your related person. See, I sold to my related person. My related person sold it further to an unrelated customer. So whatever price my related person charged to that unrelated customer, take that price multiplied by 90%. That becomes your value. So I sold to my related person. You are not accepting this value because you doubt whether this will be proper or not. Okay. But when my related party sells it further to a customer, take that price multiplied by 90%. This becomes my price for the purpose of paying tax. And last, very interesting part in case of related party transactions, if whatever I'm going to charge to my related party, if my related party will get full ITC. Now, what do you mean by related party is eligible for full ITC? My related party is engaged in forward means outward supplies which are fully liable to tax. There is no exemption. There is no RCM supply made by my related party. So whatever my related party will do, related party is liable to pay tax. And when my related party is liable to pay tax, it is also eligible for ITC. Now, if my related party is eligible for ITC, then it says whatever price I charge, that will be accepted as open market value. In short, even if I charge 1 rupee, that will be accepted and that will become the taxable value. This is a very unique point relating to related party transactions. Then, when I'm supplying to my agent or through my
Sir,
agent, yes, beta,
sir,
please tell me.
please explain the last point again. Recipient eligible for ITC.
Okay. See, what it means is, I'll give you an example.
Please
Let us say,
explain the last.
yeah, but I'm explaining. Pay attention. See, you are my related party. Okay? Because you are fitting in one of the definitions of related party. Let us say you are my relative. So you are my related party. Now, I am selling these water bottles to you. Now, this water bottles, when I sell outside, I charge 500. But I am selling to you for rupees 10. Now, you are my related party. And whatever business you are doing, your business is fully taxable. It means whatever supplies you make further, those supplies are fully taxable. It means, now try to recall ITC chapter. In ITC chapter, you have section 17.1, 17.2, where there is restriction on getting full ITC. 17.1 says, if you are making business plus non-business supplies, you will not get full ITC. 17.2 says, if you are making taxable plus exempt supplies, you will not get full ITC. In both these cases, section 17.1, 17.2, you are given proportionate ITC, means proportionate of your ITC is restricted. Only proportionate is given. This is where we say you are not eligible for full ITC. But where no such restriction of 17.1 or 17.2 applies. Now, when it will apply? When there is no restriction, when your entire outward is fully taxable. So whatever outward you are making has no restrictions. It is not exempt. It is fully taxable. It is in forward charge. It means whatever outward supply you are making is fully liable to tax. And when it is fully liable to tax, you are also eligible for ITC. In that case, we fit in this last case where I say that my recipient, which is you, is eligible for full ITC. And when you are eligible for full ITC, then the rule says, forget about all the points what you studied above. Don't take open market value, forget about everything. whatever is the price which I've charged to you in invoice. Let us say I'm saying, even though this bottle is of 500 rupees, I'm charging you for rupees 10. So 10 will be accepted and I have to pay tax on 10. This is what it means, madam. I hope this is clear.
Yes, sir.
Perfect. Then we were on rule 29, where the supply is made to or through agent. Now, where the supply is made to or through agent, the value will be what? The value will be first, as usual, the open market value, or now here again, they have given you the same choice which was given here. What was that choice? That when I'm selling to my agent and my agent would be selling further, whatever price my agent is charging, you take 90% of that. That becomes your price and you pay tax on that 90%. Or again, rule 3031. So what is special is, in case of agent, I'm again given that option of taking 90% of the price which my agent is charging further to unrelated customer. So that is what is common between related person and agent supplies. Now we come to some very specific supplies given in the valuation. What is this? Where the supply is of lottery ticket. Now we all know lottery ticket, right? Now when lottery tickets are sold, then what is the value? Now here it depends upon who is selling the lottery. Whether the lottery is organized by state or it is a private lottery. We have both types of lotteries, right? So what it says, where the lottery is organized by state, the value will be 100 upon 128 of the face value of ticket. So we say lottery ticket is of 100 rupees. So the taxable value will be 100 value, which is the face value of the lottery ticket multiplied by 100 upon 128. Means we assume that that 100 rupee lottery ticket face value is inclusive of the 28% GST. So we divide it by 1. But this will be the case only where the lottery is a state run lottery. However, where it is not a state run lottery, or you are now participating in some betting, gambling, or some horse racing, where again you are putting some amount as stake. In that case, whatever is the amount which you have kept on stake, that amount 100% becomes the taxable value. So, difference between these two is that here, if I'm buying a lottery ticket of 100, my taxable value will be coming somewhere in 80s. Why? Because it will be 100 multiplied by 100 upon 128. So it will come somewhere in 80s. However, where it is in this case, that is the lottery is not organized by state or it is betting, gambling, any other activity, then I have to pay tax on entire 100. So the the taxable value will be entire 100. So this is the difference between the two categories, lottery organized by state and other cases. Then we come to conversion of foreign currency. Now in foreign currency conversion, there are two methods given. First is you can say the real method and the second is the assume method. What are these two methods? So the first method says, now see, firstly, what is this supply? This supply is I am a money changer. You come to me with $1 lakh and you want me to convert it into rupees. Now let us say today's rupee price, dollar to rupee is 85 rupees, for example. So when you give me $1 lakh, I should pay you 85 lakh rupees. But I will never pay you 85 lakh rupees because for doing this conversion activity for you, I'll charge some percentage as my commission. Right? Now that commission is the service. The value of this commission has to be found out by one of these methods. First method is you take the buying rate, selling rate, and from this minus the RBI reference rate at that time. So what is this? The price which I am quoting to you. So I have quoted you 85 rupees minus whatever is the RBI rate at this point of time. Let us say RBI rate is 84 rupees. So the difference is 1 rupee. And actually that is what is my benefit. So if I'm charging you 85 and the RBI rate today or this point is 84, then this difference is my profit, or what you can say is the commission. So per dollar, I'm earning rupee 1, multiply by number of dollars which I have exchanged. So I have exchanged 1 lakh dollars. So my commission will be 1 lakh. On 1 lakh, I have to pay tax. However, if there is no RBI reference rate, then the value will be 1% of the INR. So what is INR in my example? 1 lakh dollar converted to 85 lakh rupees. Take 1% of 85 lakhs. That becomes the value. If the currencies exchange are not in INR, now next possibility is you are giving me dollars and I am giving you pounds. So there is no rupee involved. Now, if no rupee involved, you will not be able to find out that 1%, 2%. Then what they say, if currencies exchange are not in INR, so both sides there is foreign currency, then the value is lesser of the two amounts that would have received by converting any of the currencies into INR. So you gave me 1 lakh dollar. Let us say I gave you 60,000 pounds, for example. So in this case, find out the rupee value of both. So convert 1 lakh dollar into rupees, convert 60,000 pounds into rupees. Out of both, take whichever is lower, and of that, take 1%. This is how you find out the value. All this is by the first method, which I say is the actual method. Second is the deem method. What is the deem method? They have given some slabs. You find out your commission or you find out your value by one of these slabs. So what are they? For first rupee 1 lakh. So let us say I have converted for you 85 lakh rupees. Now for first rupee 1 lakh, you will take 1% or 250, whichever is higher. Then for the next 9 lakhs, that is from 1 lakh 1 to 10 lakhs, that is for next 9 lakhs, you will take this 1000. How this 1000 has come? On the first 1 lakh, 1% is 1000, plus for this 9 lakhs, take 0.5%. And then for all the balance amount above 10 lakhs, take 0.1%, but subject to 60,000. So this is same like how you compute income tax by slabs. The only difference is in case of income tax, the slab rate increases 5%, 20%, 15%, 30%. Here, the slab rates are reducing 1%, 0.5%, 0.1%. Fine. Is it okay, students? Again, we'll take a small break. Now this break is of 10 minutes. After that, we'll complete the remaining small valuations and we'll also go to time of supply. Fine. Great. 10 minutes break, students. Siddharth, see, I cannot say that. See, Siddharth's question is very valid. Sir, second method is followed when dealer doesn't want to disclose his true earnings to the department. See, Siddharth, it is not about always whether you want to disclose the true earnings or not. In fact, even in the first method, you will find that where they are saying 1% of the total INR value. That is also not showing your true earnings. It is not about showing or not showing the true earnings. Many times it so happens that in case of this foreign currency, practically you do not know what is your true earnings. I'll tell you how. See, it is like a gold dealer or any jewelry person. Let us say I am the jewelry person. Somebody has come to me, sold the gold to me at some earlier date. Today you are coming and buying either gold or jewelry from me at today's rate. Now that date's rate and today's rate by default would be different, but keeping a track as to at what date, which price I had purchased this same gold which I am selling to you today is practically impossible. Same thing happens in case of this currency. I am continuously buying and selling currency. Now, currency is currency. There is no identification that this was purchased on this date from this person at this price. This was purchased next day from this person at this price. As I get on currency, I keep on just stacking all the currency bundles. Understand this better. So practically, it is impossible to identify at what real price I actually purchased this currency which I am selling to you today. That is why, in fact, the real margin is never known practically even to the dealer. Understand this, right? So that is why they have given this first thing. Second most important thing, see, we are not paying tax on our margin. We have to pay tax on the commission or our service fee, which we are charging for converting the currency. Now, this difference, which we are just talking, I purchased this currency, let us say when the price was 82, I am selling today when the price is 85. It can be other way around also. I purchased when it was 90 and I am selling today at 85. I have no choice but I have to sell it because somebody is coming to buy it. So there may be profit loss on either side because there can be either way fluctuation in foreign currency. But there is no tax on this fluctuation difference because that is tax on my profits or gains on this fluctuation, which is not part of GST. GST is a tax on the value of the service. And what is my service? I am giving you the facility that I will convert the currency for you. Now, many times a dealer in this foreign currency, what he does, he may charge a separate fee to you, or he will not charge any fee. Like I will not say I'm charging any fee. I'll say, okay, see, this is the market rate. You can see on the portal anywhere. I'm giving you at this rate only. But inside me, I know that already I am earning a huge margin because I had taken it when the price was very low. So because of this, real price or real difference is never known. And that is why these rules are given. Understood better? So it is not because anybody wants to hide the real margin or it will get hidden. In fact, there is no real margin known at times. I hope this is clear to you. Perfect, Siddharth. Good question, Jyoti. For September attempt, amendments up to which date should be covered? But it is simple rule, 6 months before your exam. So all amendments 6 months before September, so it will come somewhere in March. So up to that date, the amendments amendments up to that date are to be covered, right? Now, the other remaining valuation rules are that for air travel booking, the agent's valuation is 5% of basic fare if it is domestic and 10% of basic fare if it is international. This is the valuation. Then for life insurance, again, they have given some estimated value. So there are different values given for different businesses. You can read by yourself. So I'm not getting into this. So this is the simplified part. What is important is this rule 35, value inclusive of taxes. This is very important. Where a price is quoted, let us say I say my price of this batch is 10,000 rupees, and I'm not saying how much of this is GST. Then the law says, this is provided in the law itself, that it is presumed that the price is inclusive. And since it is presumed by the law itself that the price is inclusive, hence we always do back calculation. So whenever a lump sum price is quoted without separately charging GST, at that time rule 35 comes into picture. It says you will find out the value by doing back calculation. That is, if my GST rate is 18%, so whatever is my total value multiplied by 100 upon 118. So this is how we always find out our value. Fine. Let us go to the next chapter. Now, this according to me is quite simple topic. It is time of supply, which is provided in section 12 and 13 of the CGST SGST Act. Firstly, students, let us understand what is time of supply. Time of supply is the date on which the law presumes that your liability triggers. Let me put it in different words. See, supply is, you can say, not necessarily a one-pointed event. It may be something which is spread over few dates. I'll explain how. Like, for example, this class may be spread over 20 days. In this 20 days, 2 months may get covered because this class may start on 20th of this month and end on 10th of next month. So there is some tax period which is changing. First point. Second point, many times in case of a transaction, how do you identify that the transaction has happened, especially when it comes to service? See, when it comes to goods, you can see physically when the goods are going or coming. But when it is about service, it is very difficult to identify because there is no documentation, because there is no physical movement of service. So for service, how do you identify that this service transaction or this supply of service has happened? This is identified through certain entries that we pass. Now, what are the different transaction capturing entries? One, in case of goods, it would be the physical delivery because that is recorded through delivery challan and different other documents. But in case of service, there is no such document because there is no physical delivery of service. Then the second document or the second transaction reporting thing is the date on which the invoice is prepared. So the second trigger point where you are able to identify a transaction, that a transaction has happened, is the date when the invoice is prepared. And the third transaction identifying date or point is the date when you actually receive the payment. So understand this. There are three transaction identifying points. What do you mean by this? Through these three, you come to know that, okay, yes, really some transaction has happened. For goods, the physical movement. Then for goods and service both, the date when actual document, that is invoice, is prepared. And again, for goods and service both, the date when actual payment happens. Now, when a supply is happening, the law wants to fix as to the date on which the taxpayer becomes liable to pay the tax. And this is where the concept and the provisions of time of supply comes into play. What does this time of supply provision says? It simply says we will ask you to pay the tax on earliest of these triggering points. Simple. So you have three triggering points in case of goods, two in case of service. So we want you to pay tax on earliest of these triggering points with some changes. Fine. Now, for the purpose of determining time of supply, we have our transactions divided into forward charge transactions of good service, reverse charge transaction, good service, then transactions where you have to calculate tax in case of vouchers, where supplies happen through vouchers, then in case of interest and others. So the transactions are classified into these 4 or 5 categories. We'll go category wise. First, time of supply of goods, and the transaction is where it is a forward charge. Now what they are saying, the time of supply will be earliest of the following dates. Date 1 is the date when you have actually prepared the invoice. Date 2, the date by which you should have prepared the invoice. Understand the difference. So date 1 is the actual date when you have prepared the invoice. Date 2 is the date by which you should have prepared the invoice. Now, what is this date by which you should have prepared the invoice? So you go to section 31, where section 31, which is of a different chapter, it is of the invoice chapter, but it has a linkage over here, so it is provided here. So Section 31 tells you the date by which you should compulsorily have prepared the invoice. Now, what is that date? The physical movement of your goods. So for goods, there is no extra 30 days like you have for service. For goods, you should have prepared the invoice maximum by the date of the actual delivery or actual removal of the goods. Next, so in case of goods, there is only one date. That is the date on which the physical movement happens, which they have used the term removal or delivery. Now, what is the time of supply? So it is the actual date of invoice, first date. Second, the date of removal or delivery of goods, the second date. Third date, which is the date of payment. As I said, there are three identifying points. This is presently not applicable for goods. So by way of a notification in November 2017 itself, they have removed this condition. So for the time being, for time of supply of goods, you have only two dates. One is the actual date of invoice. Second is the date by which the invoice should have been prepared, which is in case of normal supply of goods, it is the date of removal or movement on which the date when which the movement starts, that is the date when delivery is given. Fine. Now, in case it is continuous supply of goods. Now, what is continuous supply of goods? I am continuously giving you the delivery of goods, maybe either on daily basis or alternate day basis, weekly basis, what we have agreed. But we will do our hisab, we will do the final accounting, how much I have supplied on a particular date, which may be monthly, which may be quarterly, that will be decided between you and me. So simple example, a practical example, because many times students read this continuous supply concept theoretically, practically they don't understand. So practically, I'll give you a very simple example. Same example applies for normal supply also and for continuous supply also. You go to a grocery shop virtually every day. So morning you go to buy some bread, some eggs, some butter. Maybe in the afternoon, mama goes for buying some other daily household item. In the evening, dad goes for buying some ice cream, and virtually this happens on virtually daily basis. Now, in this particular case, understand this. You can have both type of transactions here. Either it can be a regular supply or a continuous supply. What is regular supply? Which generally happens. You go, whatever you are buying, you pay over. The transaction is over. Morning transaction is over in the morning. Afternoon, mummy goes, whatever buys, she does the hisab, they make the payment over. Evening, dad goes, whatever he buys, he makes the payment over. These are all independent regular supplies. Second possibility, which also happens in many cases, where that particular grocery shop, general provision store is your regular, that person also identifies you, you also know him very closely because regularly you are buying. Your mummy goes to that person saying that here every time somebody comes, every time you do some hisab, I also make payment. Instead, let us fix up a monthly routine. So it may be monthly, it may be 15 days, it may be quarterly, whatever. That is between what you agree with that shopkeeper. Okay, every time somebody will come, you only make a noting in some book somewhere. Don't make an invoice, and we will also not make a payment. And at the end of the month or after 15 days, whatever you have agreed, that is periodically, we will settle our accounts. Hisab karenge. In this, you may also agree that since he is regularly giving you goods by making only a noting, maybe every week your mummy will go and deposit 1,000 rupees. That may also be agreed. So there could be even continuous payments flowing. So all this is depending upon what you have contracted with that person. So what is continuous supply of goods? Where there is a contract for regularly giving the goods. I'm using the word giving to understand. Regularly giving the goods, but not making any invoice or not doing the hisab, which will be done periodically. So the accounts would be settled periodically, which may be 15 days, month, quarter, whatever. And it may or may not have periodical payments. So either you will also make periodical payments, mama will go and deposit 1,000 rupees every week. And when you sit for the settlement, you will finalize what is the net payment, which mama will make payment, and that transaction will be closed. This is continuous supply of goods. Same thing is continuous supply of service. Best example is this coaching, where you join a coaching. Again, every day you are learning something. So there is continuously some service being given, but payments are periodical. So this is again an example of continuous supply of service. The only difference between the two definitions is for continuous supply of service, there is a condition that it should go minimum for 3 months. If it is less than 3 months, then they will not classify it as continuous supply of service. Fine. Now, in case of continuous supply of goods, what is the time limit for raising invoice? They say either it will be on the date of settlement, that is when the hisab is done, or it could be on the date of periodic payment. So that is what is the date by which invoice should have been issued. So this is what is about forward charge, time of supply of goods, earliest of these two dates, actual date of invoice or the due date of invoice. In case of service, now for service, if you see the time limit given in section 31 for raising invoice. So section 31 says that for service, you are given 30 days cushion, that after the provision of service, you have 30 days to make the invoice. In case of banks, insurance, financial institutions, they are given even more period of 45 days. So even if I complete my service today, let us say I complete your audit today or your return filing today, I need to raise the invoice in next 30 days. That is the time cushion given. Now, what is the time of supply for service transactions? You have to see whether the invoice was issued within this 30 days or not. So there are obviously two possibilities, yes, no. If yes, the invoice was issued within the 30 days time, it means your invoice is a proper invoice, a valid invoice, I will say, because it was issued within the timeline. Then the time of supply is earliest of 2 days. One is the date on which the invoice was prepared because it is valid, or the date on which you have received the payment, whichever is early. But if the invoice was not prepared in time, then we will not consider it as a valid invoice, because if you prepare the invoice late, you are delaying the tax payment. We are not accepting your invoice. Not accepting means it will not be considered as a valid invoice. In that case, the time of supply will now not be the date of invoice, but then it will go back to the date on which service was provided, or the date of receiving payment, whichever is earlier. And then they say where above events are unascertainable. Now, this point is given in service. Why? Because again, please understand, service is something which is invisible, intangible. There is a very good possibility that service transactions may not record it because there is no physical movement. So they are saying, in case any of the above transactions are unascertainable, it will be the date on which the recipient has shown the service in his books. The supplier may not record the transactions either with the intention of tax evasion or because it is neglected. But if service recipient is recording, that will be the time of supply. So this is for forward charge. For reverse charge, it is earliest of 3 dates in case of goods. Why 3 dates? Because again, there is one physical movement date which is missing in service. So there are 2 dates. What are the 3 dates for goods? It is the date when you have received the goods, or the date when you are making the payment, or they here have given you 30 days grace. So 31st day from the date on which you receive the supplier's document or invoice. Here I will not use the word invoice because there is a possibility in case of reverse charge that your supplier may be unregistered. So, but still he may be giving you some kacha bill. So let us use the word invoice means kacha bill, may not be tax invoice. So earliest of these 3 dates will be your time of supply if you have to pay tax under reverse charge for goods. When it is reverse charge for service, one, it will be the date on which you have made the payment to the supplier, or here adding more 30 days as compared to goods, because in forward charge also goods were having no grace, but service was having 30 days. In reverse charge, if goods is having 30 days, so service should have 60 days. That is why they have said the 61st day from the date of issue of the document or invoice by the supplier. Again, where the above is not ascertainable, then the time of supply will be the date of entry in the books of the recipient. And in one specific case, that is import of service from your own associated enterprise, that is your own branch outside, the time of supply will be the date of entry in the books of accounts of the recipient, or the date of payment, whichever is early. Next, when you are supplying goods or service through vouchers. Now, what are these vouchers? These vouchers are like, I want to gift you something, but I don't know what you will like. So what I do is I go to west side, and over there, let us say my budget is 2000 for gifting you. I will go to west side. I'll say, ki, okay, I'm paying you 2000. You give me your west side coupon or west side voucher. Now what will happen? I'll come and give you that west side coupon or voucher, which is of 2000. So I said, ki, see, this is my gift to you. I have not purchased anything, but you go and buy whatever you want of your taste, of your preference. Now, today what I have done, I have paid 2000 to Westside and purchased that voucher. Now, please understand, on voucher, there is no GST. Voucher is neither goods nor service. It is actionable claims. And now it has been even decided and accepted. Earlier, there was confusion on this. Now that is settled. So there is no GST on the voucher per se. But where I am supplying goods or service through these vouchers, then this particular point triggers in that what will be time of supply. So for this, they are saying if the voucher is such that the supply is identifiable, means it is written that in this voucher you can only purchase perfumes. It means supply is identifiable. Then today is the date of time of supply. That is, Westside has to pay tax today. That is the date of issue of vouchers. However, in other cases, that is where it is a generic voucher. You can buy anything, perfume, shoes, apparels, even electronic items, anything from Westside. Then it will be the date on which you go and buy from Westside. Right? Then there is residual time of supply provision. It simply says where it is not possible to determine the time of supply under any of the above provisions. This generally happens in case of fraud cases or those cases where people are caught at the time of raid. They have not maintained any documents or they have not issued any documents. They had suppressed their transactions. Then they apply this rule which says where periodical returns are required to be filed, the time of supply is the due date of filing the returns. And in other cases, it is the date of payment of tax. And then the last case of time of supply is where the time of supply pertains to that interest. If you remember, we studied this in valuation chapter. Which interest? Interest on late payment of tax. So where you are making, not tax, sorry, the consideration. So where you are making payment of my consideration late after the due date, I'm charging you extra amount, which is towards the interest late fee penalty. What is the time of supply for this interest late fee penalty? It is the date on which you are making me payment of this extra amount, which is towards the interest penalty. So if you are making payment to me of this interest after 3 months, that date on which you are making payment to me is the time of supply. Now, then comes section 14, which deals with what if between all these 3 dates, physical movement, that is the date of supply, second, invoice or payment, if the tax rate has changed. So let us say council announced some amendment and the amendment is effective from today. Now, out of these 3, something has happened till yesterday and something will happen after today. So out of these 3 dates, supply, invoice, payment, something has happened before, something is happening afterwards. What will be the time of supply? Now I'll give you a simple answer. The simple answer is, what has happened? The rate has changed, right? Now you have to see what. Let us say today is the date of change in rate. See whether you made the supply before the change in rate or after the change in rate. So there are 3 dates and some of the date is happening before or after the change in rate, right? That is why we have come to section 14. If all the 3 are happening before the change in rate, no problem. If all the 3 are happening after the change in rate, no problem. We come to section 14 only when one of these things happen before and one of these things happen afterwards. But when you are applying section 14, I'll give you a simple trick. What is that trick? See the date of supply. So you have made a supply. See whether this supply is happening before the change in rate or supply is happening after the change in rate. So first possibility, supply is happening before the change in rate. In such a case, out of these 2 dates, whatever dates are given to you, take the date whichever is before. So out of these 2, take the before date. I repeat my rule. My rule is very simple. If there is a change in rate and out of these 3, something has happened before change, something has happened after change, then what you have to do, if there is a change in rate, first see the supply has happened before the change or after the change. My first possibility, supply has happened before the change. Then your answer will be take the date of invoice and the payment, but out of this, whichever is before. Why? Because the supply has happened before the change. Second, same rule, if the supply has happened after the change in rate, then out of these 2 dates, take the date whichever has happened after. So if invoice is after, take the invoice date. If payment is after, take the payment date. So I can apply this rule here. So what is the rule? First, see where supply is happening, before the change or after the change. If the supplies is happening before the change of rate, then out of these two dates, which two dates? Invoice date and payment date. Take which date? Whichever is before. So you will take invoice date. Second example, supply has happened before. Out of both these dates, which one you will take? Whichever has happened out of both these earlier. So you will take this date. Similarly here. If supply has happened before the change in rate, but both these have happened after the change in rate, which date you have to take? You can take any one of them because both have happened after. But the rule is what? If supply has happened before, you have to take out of both these the before date. Similarly, if the supply has happened after the change in rate, out of both these date, you have to take the after date. So if my invoice is after, I'll take the invoice date. If my payment is after, I'll take the payment date. If both are before, you take any of the dates, the answer will be same. So remember the trick. The trick is in this. If supply has happened before, out of these two, take the before date. If the supply has happened after the change in rate, out of these two, take the after date. This is the trick. Fine, students? Superb. So with this, we have completed all the three topics in totality. I think ma'am is here and she needs to make some closing inputs. So I'll request ma'am to please take over from here. Good evening, ma'am.
Good evening, sir. Rather, we should say good night to the students now.
Yes.
And because by now, I think they would have understood the topic. Yes, thank you, Vishal sir, first of all, for a wonderful session. And as he has discussed these topics, the time of supply, value of supply, exemptions from GST, they carry, very good weightage in the examination. And since they are important from examination point of view, and because these provisions are the substantive provisions, and all the substantive provisions are very important. In fact, you get a compulsory question of 14 marks in the examination, and that question is typically based, it covers all the substantive provisions, including the input tax credit, which shall be taken up in the next session. So please be there in the classes. And yes, I request all of you that you have the schedule with you beforehand. So whatever the topic will be taught in the next class, please go before those topics. Beforehand, because these are the revisionary classes. So you should have an idea, because here, sir, when sir teaches, he has this preconception that you already have studied the topic. So he just, he's just revising with you. So you need to go beforehand, and then even then you would be able to raise your queries if you have gone through the topics before. So I request you to please go through the topic of the next class beforehand, and keep your queries, keep your doubts, ready, so that you can, all your doubts, all your queries, you can get clear from the sir in the session. And I hope that all your doubts have been cleared and these topics were important. And while we are just, at the end of concluding this session, I request all of you to please share your feedback. Your feedback is very important in all the classes, because, we decide the methodology of teaching based upon your feedback. What topics you feel difficult, or you want, you want sir to take up any particular topic in a depth manner, or any particular question, illustrations you feel you want him to, again, focus upon. So please share your feedback. I am giving you 2 minutes time, and thereafter I will share with you one more point, and then we shall end up the session. So please, I know that this time you must have, in a sleepy mode, or you must be craving for the dinner. But please have the feedback, because that is really very important. And then we shall conclude the session. And I know that once you end this session, it becomes difficult for you people to spare time from the busy schedule to share your feedback in the feedback form. Most of the students we have seen is that they share the feedback in the chat box. You may share it, but please don't forget to share the feedback in the feedback form. So, meanwhile, I'm talking, I'm expecting that you people are sharing your feedback in the feedback form. And once again, I am thankful to the sir for this session, and I request you to go through the topics which are already hosted beforehand and just go through the topics and prepare, jot down your doubts, jot down the proper illustrations, questions which you feel, or the like for ITC, many things like reversal, etc. are important. So you will be able to understand them more precisely if you have already gone through the topic. So that is very important. Are you done with your feedback? May I know in the chat box? That have you filled the feedback form? Thank you for organizing wonderful session. And yes, we board of studies are working day and night for you people so that you get benefited from these classes. And all the topics you can go through the video lectures has already been hosted on are already been uploaded on the YouTube as well. You may go through them. And these topics, all the topics, especially in the GST, the substantive provisions are very important because they are from the basis, they form the backbone of the GST law. If you are able to understand the substantive provisions, then only you will be able to understand the procedural law in a better manner. So please be there in the classes and go through these topics, and various amendments are also there have been made recently in the valuation basically. So please go through those amendments made by circulars, and in fact in case of supply as well we have got a lot of circulars. So I hope that you are, side by side going through the relevant topic which we are discussing in the classes. Jyoti is saying, Tukri is asking, ma'am, where feedback is available. Feedback form is there. That is there on the, I think, in this portal. And if anybody is not aware of, then we will share the link of the feedback form in the next class. You can also give me your quick feedback in the chat box. Are your concepts clear?
Thank you, ma'am. Clear, ma'am.
Thank you, Jyoti. Thank you very much. And any of your friends who are not aware of these classes, you may communicate them so that all the students, because they are also conducted free of cost by ICAI, so they also get full use of it, right?
Ma'am, is there any WhatsApp group for?
Yes, a WhatsApp group is there, and all the students, I think, who are there in the classes, they can be a part of it, and we will share you the link in the next class.
Okay, ma'am.
Students, in the morning, I will share you the WhatsApp link.
Yeah. Yes, sir. Yeah. Thank you.
See, if you will read the topic beforehand, the one advantage which you will have is like in the next session, we have, let's say, it is like ITC. So if you feel that one particular your doubt or something you are unable to understand, reversal, what shall be included in the exam supply, because these topics get very much importance, higher weightage in the examination. Reversal provisions, and sometimes students find it difficult, block credit and all. So if you go the topics beforehand, you will have the as when you go through these classes, you can clear your doubts at the same point of time when you have read those, gone through the topics. Because what happens is that if you will attend these classes later on, if you have not gone through the topics, you will not be able to fully appreciate the provisions which sir is discussing with you, why he's stressing upon a particular topic, but all the amendments are there. So it is very important for you to go through the topics beforehand. So now we end up the session. Thank you, sir, and thank you, students.
Ma'am.
Thank you, ma'am.
We have shared the WhatsApp link on chat.
Okay. Please be there for 2 more minutes. And Ajit sir is sharing.
We have already sent, ma'am. We have already
shared. Yes, he has shared. Ashok has shared the group link. Any suggestions you have, you may share with in the feedback form for the faculty, or any other suggestion relating to the conducting of these classes. So I hope that all of you have filled the form, and with this we end up the session. Thanks a lot, sir, and thank you.
Thank you very much.
Thank you, friends. Good night, and have the dinner, and have a good amount of revision of these topics as well. Whatever is the schedule suits you. It is not, everybody is not a night person, and everybody is not a morning person. So whatever the schedule suits you, there is no fixed formula. Whatever if you feel that you can revise it better for you, to like having a small nap, you can revise better during the night. Or if you feel that it is easy for you, you're a morning person, you recall more if you read in the morning. Whatever timetable suits you, but please go through the topics after these sessions are over. Then these the provisions will get registered into your mind. If you, after the end of this session, if you will once again review the topics and go through the questions and answers. Okay, thank you.
Good night, ma'am. Good night, everyone.
Good night.
Thank you.
Yeah, session is over.